and I want to prove to you it's why it's so hard to overcome losses. Now, here's what I've been taught in my 55 years. I was taught in grammar school 1 + 1 = 2. Now, that is an absolute, and no one's going to challenge me on that, correct? Let me show you how Wall Street math works, okay? Let's say the market were to drop 50% this year. Okay? We saw 30% in March. So question, could the market drop 50%? Sure it could. It did it in 2008. See, the problem in 2008 is a lot of you were convinced that your investments were conservative investments. They were not conservative. You have been indoctrinated to think that blue chip stocks, as good as they are conservative investments. Blue chip stocks lost 50% of their value in 2008. Anything could bring this on. If we don't get a vaccine, if we see the pandemic get worse, if we don't see the jobs come back, if we see our trade with China heat up, any type of military issue in the Middle East, this could be in our future, okay? So let's say the market were to go down 50%. Let's say the very next year the market were to go back up 50%. Don't overanalyze this. What is the average rate of return with those two numbers? It's 0. That is partially true. If something is partially true, what does that really mean? It's a lie. And I want to show you how Wall Street plays a game with the numbers. Let me give you a number. Let's say that we've got a client who's got $100,000 to invest, and the market were to go down 50%. So right off the bat, you now have $50,000, right? Then let's say the next year the market were to go up 50%. That's 50% on 50. So you just made $25,000 back. So your total value is $75,000. What's your real rate of return? Real rate of return, -25. What's interesting about this, guess what Wall Street is telling their clients? Oh, you didn't get beat up. You averaged 0. Listen, funny math doesn't work when you're older. Listen, I'm not talking to your children and your grandchildren. They've got time and they've got earning capacity to make money in the market.